Hybrid jobs are the new normal in a post-COVID world, and commercial real estate is feeling the punch. The latest national vacancy rate for office properties dropped 19% in the third quarter. That's just 3 points below the historic high that was set back in 1991. Prices for office buildings have fallen 20 to 30% from the peak levels. And joining us right now to talk about challenges in the sector is Don Peebles, the Peebles Corporation CEO and chairman. And Don, there have been so many people who have worried about what the woes in commercial real estate will mean to the broader economy. What really is happening on the ground right now?
Well, what's happening on the ground is people are just not coming back to work. Office space around the country in the most active commercial cities, like Washington, D.C., for example, New York City, occupancy rarely hits 40%. Washington, D.C., the federal government, which is the biggest consumer of office space, both as owners and as tenants, are occupying about 25% of their space. And that's happening around the country in cities like Los Angeles and San Francisco, and it's having a chilling effect on values. And so we're seeing now a big step up now in terms of property owners turning back the keys to these office buildings to their lenders. And we'll see that accelerate a bit into this month and certainly first quarter and second quarter of 2024.
Do you think it's enough, that pressure of people just handing the buildings back to the lenders, to the banks, to create some sort of problem in the financial sector?
I think in the regional banks who own most of these commercial loans, I think you're going to see some difficulty there. I think that what's happened, which is very unusual in these circumstances, is that the lenders don't want the properties back. And so they're encouraging the property owners to hang in there, and the property owners are just looking at the opportunity cost and want to turn the page. So you have the inverse of what normally happens in a financial crisis. But I think that this is going to continue, and it's going to hurt local and regional banks, both on assets that they own and losses that they're going to take, but also new business. They're not going to be able to deploy capital outside, so their numbers are going to go down and their earnings are going to drop significantly.
Is there enough private capital to step in and take over the buildings from the people who are in over their heads on the loans?
Yeah, I think that, look, the financial markets are very efficient. Private credit has played a major role in commercial real estate for the last 5 to 7 years, and that'll continue to happen. What's happening here, though, is that these values have to go down. I mean, office building values are down over 50%. In places like Washington, D.C., they could be down 60 to 70%. So the first step has to be that the lenders take these assets back and decide to write off these losses and how they get handled. And then you'll see private credit step in and let new buyers come in and buy these buildings and put them to more productive uses.
Is it safe to assume that you would be one of those buyers at lower prices?
Absolutely. We are actually in the marketplace now, beginning to look at opportunities to buy. We're chasing a couple of major office buildings right now in a couple of cities around the country and raising capital to do more of that. I think there's going to be a tremendous opportunity from an investor side to get outsized returns by buying these assets and putting them to more productive uses, or to make them more competitive in the office space and looking for new tenants who ordinarily wouldn't consume as much office space, but price will bring them to the market. And I think that's going to happen. I think you'll see price bring more tenants to the market late 2024, and then, of course, going into 2025. I think, with some change in policies, I think you'll see more aggressive use of office space as people begin to go back to work.
Don, very quickly, we got to run, but by 2025, you think those office buildings will be more occupied?
I think slightly, but I think that there's a new normal now, and there's a shift on where people work. And so I think we'll see more employment hubs as opposed to employment centers, so people can live closer to where they work. I think also you'll have these office buildings converted to housing, and people will be able to live in urban centers more efficiently and cost effectively.